If you think your recent crypto losses are just market volatility, you might be getting played. While nobody was looking, a quiet, coordinated attack wiped out nearly $1 billion from traders in just 24 hours. Stick with me, and by the end of this, you'll understand the alleged four-step playbook being used to engineer these crashes and why the biggest players might want you out of the market for good.
Okay, let's start with this number, $900 million. That's the amount that, in a single 24-hour period, was just, poof, gone from the accounts of crypto traders.
And I want to be super clear here. We're not talking about a paper loss, where your portfolio just takes a temporary dip. No, this was the complete and total wipeout of leveraged trading positions. So people who borrowed money to make bigger bets, their entire accounts were vaporized. That money, it's gone, for good.
Now, for an event this massive to happen, you'd expect some huge headline to go with it, right? But there was nothing. And that silence is what's fueling this powerful theory, that this was no random market burp. This was a deliberate, coordinated attack.
All right, let's dig in. We're going to start by looking at the immediate aftermath of this crash. You could almost call it the scene of the crime. And believe me, this is where it starts to get wild.
Just look at the sheer scale of this thing. We're talking about Bitcoin dropping around 10%. Its market cap losing $120 billion. And the total crypto market, over $300 billion just erased. All inside of 24 hours, and again, with no big news event to explain it away.
Now, to really get what's going on here, we actually have to go back in time. There's a specific moment, a pivotal day, that a lot of people are pointing to as the real starting point for all this chaos.
So here's the timeline. Things were looking pretty strong in September 2025. Then, wham! October 10th, the Armageddon flash crash. We saw a brief recovery after that, but it was just a fake out, because then in November, another massive sell-off. According to this theory, October 10th, that was the day the foundation of the market just cracked. Everything else was just an aftershock.
And this was no small blip. I mean, you have major analysts like Tom Lee going on CNBC and calling it Armageddon. He said it was a liquidation unlike anything seen in the entire history of Bitcoin. And get this, the source claims that a third of all of crypto's market makers, the firms that are supposed to provide stability, went out of business on that single day.
So, what was the official story? Well, it was chalked up to a pricing glitch. Essentially, an error on Binance, the biggest exchange in the world, that supposedly showed a bunch of assets at a price of zero. That, in turn, is said to have triggered all the automated sell-offs. But the theory we're digging into here suggests that calling it just a glitch might be the understatement of the century.
Okay, so if the official story is just a glitch, but the damage was this catastrophic, you gotta ask, who benefits? This is where the theory gets really juicy. It says this was no accident. In fact, it centers on the alleged teamwork between two absolute giants in the crypto world.
Let's meet the key players. On one side, you have the venue, the stage itself, Binance, the #1 crypto exchange on the planet. And on the other side, a massive market maker called Wintermute. These are the guys who use super fast computers and complex algorithms to trade huge volumes of crypto.
Right. So the core of this whole theory is how these two could have worked together. And the source lays out a very specific, and they claim repeatable, four-step playbook. And here it is, the playbook. Step 1 is the transfer. Binance allegedly sends hundreds of millions in assets, Bitcoin, ETH, you name it, over to Wintermute's wallets. Step 2, the market sell. Wintermute then dumps those assets on the market all at once on Binance. Step 3 is the cascade. All that selling pressure triggers a domino effect of liquidations, wiping out retail traders who are using leverage. And finally, step 4, the rebuy. With prices in the gutter, Wintermute allegedly buys everything back up at a massive discount.
And get this, the claim is this wasn't a one-and-done deal. This exact same playbook was supposedly run 4 separate times in 2025 alone, wiping out billions and billions of dollars from regular traders.
So, where's the proof? Well, proponents of this theory point to on-chain data as the smoking gun. If you look at the numbers, during these major sell-offs, Wintermute was by far the single largest recipient of both Bitcoin and Ethereum. And where did most of it come from? Primarily from Binance wallets.
Okay, which brings us to the biggest question of all, the why. If this was a deliberate, coordinated attack, what on earth was the motive? Why do it?
Well, the theory goes like this. It's all about shaking out the little guy,
forcing smaller, leveraged traders out of the market. The goal? To clear the runway for the big institutional players to swoop in and buy up everything at rock-bottom prices. It's about preparing the market for the so-called institutionalization phase of crypto. And remember, this all happens without any real news to explain the crazy price swings.
And this quote from the source, Encash Official, really says it all. They want us out before the next wave hits, aka the institutionalization phase of crypto. It perfectly sums up the entire alleged goal of this whole operation.
So what's the bottom line here? The theory concludes that what we saw wasn't just normal price action in a free market, not even close. It was an extremely manipulated and wildly exaggerated event cooked up by some of the biggest players in the entire space. And that leaves us with one last kind of chilling thought to chew on. As these major institutions really start to move into crypto, is this kind of coordinated shakeout just the new normal? Is this the cost of entry now in this new digital frontier?
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.